waiting for these talks on Thursday, but none of these opening ploys, these negotiating tactics around it, are making people think that they're going to see much coming out of it.
Yeah, it didn't seem like there was tremendous hope for anything comprehensive coming out, but whatever optimism there was for some kind of a truce maybe is bleeding away. I think the Brexit headlines are significant, too, and I think what you want to do now is keep in mind, yesterday the stock market didn't do a whole lot with a little bit of a rise in Treasury yields. Usually the pattern has been when the Treasury market relaxes, yields go up, stocks can follow. Didn't really happen. So I just think we're still knocking around this range. Last week's low, was about 2% below, 3% maybe below where we got to yesterday at the high. So I think it's still just kind of bleeding away some of whatever residual enthusiasm there was going to be for some kind of a deal.
That's what I'm trying to figure out, how much of this is left in the market at this point. Because if you saw really things end badly and nothing come out of this, how much more do you think the market would sell off versus if it looks like a bit of a truce when they walk away? I
still think the next round of tariffs is the thing that hangs in the balance. So the idea that would be imposed is probably the negative push. But if it's status quo, I don't think it's necessarily that big a deal for the outlook.
Do you think what's been done with the blacklisting, and now we just heard about the companies, is that another salvo? Were the Chinese viewed as a salvo? Because
it seems like it. I think there was a Chinese official saying, we're no longer calling this a special envoy. I mean, basically, they're trying to pull any significance.
But it could flip in an instant again.
And the president yesterday saying, who knows on Hong Kong, at least in their mind, seeming to link those things. And maybe I don't think hopes are very high that they wanted to deal much.
Someone
anyway.
very, very optimistic he said, I know some people in Washington, Chris Campbell. And I'm saying, there's only so many people I could think he'd be talking about because he worked there. And he says, I'm very optimistic that something big happens.
Maybe it's just managing expectations. It's a rope.
We also decided that China maybe wanted Biden, but now that he's sort of faded, and Warren would be maybe tougher on China than
Right.
Than Trump.
I don't know how much that calculus is getting played out just in the next few days.
Every week that goes by is closer to November of 2020, right?
Paul,
it's true.
We've got China as part of the issue. How much of that is you think the impact here?
Well, I think these headlines that we're talking about back and forth, nobody knows what's going to happen with these talks by the end of the week. And B, this isn't going to get solved this week. So this is going to be a long-standing issue, but it's in both interest sides not to, just go full throttle and erase tariffs and go.
But the more complicated and the more tensions that build up, the tougher it is to kind of step back from those the stances that they've drawn.
Right, but I think it's in both sides' interests to come together. The Chinese services PMI 7-month low. China's just not sitting back and relaxing and enjoying a great economy with all this.
Sure.
So, but I think in the short term, the Brexit headlines, what really drove the futures lower this morning was news of the Brexit talks potentially falling apart. So I think that's an issue for the short term, and that's coming up at the end of the month. But, overall for the market, this is a very volatile time of year. Historically, mid-September to mid-October has been the worst time of the year for the market, like if you look back to 1980. So I think a lot of this is just, we had 20% in the first 3 quarters of the year. On October 1st, we saw selling. We had a weak ISM. But the magnitude of the miss in the ISM didn't warrant the type of sell-off we saw in stocks. And I think part of it is just profit-taking after three very strong quarters. And I think going forward for the remainder of the fourth quarter, there's nothing to suggest that we can't see at least average returns, which is positive for the year.
Right. The other backdrop to all of this is earnings. We're getting into earnings seasons, and this is when it's put up or shut up, and the street will take another close look at that.
Right. And, the consensus has already been driven down to about a negative 4% for the quarter. A lot is going to depend on whether that ends up being the trough. And it looks like, right now, based on consensus, it will be. Market has been nursed through this period of very flat earnings with this drop in Treasury yields, turned by the Fed to be a little more accommodative. I guess that can last for a little while longer if, in fact, you still think you're getting a pickup. By the way, I don't think that the on-paper estimates of 10% growth for 2020 are really in the market at all. I think it's on paper. The analysts are saying that they haven't cut the numbers
But the market's
yet,
not a believer
But I don't
yet.
think the market right now necessarily is pricing that in.
And Paul, I'd be remiss not to bring up the idea that Jay Powell is speaking today, too, at NABE. And the Fed has been the huge issue. So which of these 3 major things, is there anything he could say that would either spook the markets or make them feel a lot better about things?
I mean, he could see. Who knows what he could say? He could conceivably say something, go off script, and and cause some angst in the market. But I wouldn't expect to see too much. I mean, the Fed has gotten the last couple of speeches by Powell have been much more choreographed and sticking to the notes, and so I don't expect much of a surprise there. Earnings season, I think, is coming up. Expectations have come in. Analyst revisions have been lowering forecasts a lot. To Mike's point, they constantly lower estimates as the results get closer and closer. Yeah. But the bar is set low heading into earnings season. So, as we get into October, and investors will be focusing on that. And I think we'll see pretty positive results overall.